want to figure out which way is the market trending. So I want you guys to know that there are 3 types of trends, okay? The market moves in 3 types of trends. In an uptrend, which it would be creating higher highs and higher lows. And in a downtrend, which the market would be creating lower lows and lower highs. And then sideways trending is called ranging or consolidation. Okay, so let's go ahead and see like how to actually draw a trend line. Let's start with a downtrend, okay? In a downtrend, a trend line is drawn along the top of the resistance areas. So we've already learned about support and resistance. Let's go ahead and talk about trend lines. So you will go ahead and take your trend line tool, which is right over here. And what you want to do is you want to make sure that you're connecting at least 1 to 2, 3 is the ideal touches to be an actual valid trend line. And then you're going to drag it to the future, okay? All right, you're going to drag it to the future. So I personally include the wicks. I don't ignore the wicks when it comes to drawing trend lines, okay? So that's one way to draw them. And you can draw these on any given time frame, all right? So in an uptrend, right here, an uptrend is drawn along the bottom of support areas, right? So this would be kind of like support down here, right? And then we're gonna drag it from this wick to the future, okay? All right, so 1 to 2 touches for it to be a valid trend line. Now, sometimes when drawing trend lines, you'll end up like this. It just pretty much depends. So let's go ahead and practice drawing support and drawing trend lines, okay? All right, the trend line there. Remember, 2 to 3 touches, 2 to 3 touches. Okay, trend line here, okay. Remember, you can do this on any single time frame. Any time frame. Okay. Small uptrend here. All right. 1, 2, 3 touches. All right. So I want to highlight something here. Now that we've identified uptrend, downtrend, what a trend line is. A trend line basically is a diagonal line that plays as both support and resistance, just like it would play as horizontal support and resistance, just using those lines. They're very, very strong and they're very, very valid. They help you identify the trend and the market environment. Is this market right now going up? Is this market right now going down? So if we draw a parallel line at the same angle of the uptrend or downtrend, we would have created what is called a channel. You will also hear it called a trend channel or a price channel. So what you can do is you can click on your trend line that you have drawn, for example, hit clone. And then now you have a price channel, okay? Price is just bouncing in between this channel here before it breaks out and changes direction, okay? So the market really and truly is just one big price channel. Hold on 1 second. Okay, one big price channel. All right, price bounces in between these price channel. This price channel right here is called an ascending price channel. Ascending meaning going up or uptrend. Okay, this is this one right here. All right, this one here okay, we had some slippage out, that's okay. This one here is a descending price channel, which means it's going down or moving in a downtrend. Okay. Why is this important? This is important because once you've identified how to draw price channels and realize that the market itself is just moving in these little price channels here, it helps you identify market structure even much better. So we have the market moving in higher highs, and higher lows. Okay, higher high, higher low, higher high, another higher high, and higher lows. What does this mean for you? Well, when we're trading Forex and we're able to identify the structure of any given pair and identify that we're going in an uptrend, we draw a trend line, we have identified a price channel, we've identified market structure within a price channel, this can essentially start to help you with your entries, right? So we're going in an uptrend in this example. Every time the market created a higher low, it gave you an opportunity to get inside the market. It gave you an opportunity to get an entry for this buy until market structure ranges, right? Ranges into consolidation or moves sideways, which is a key identification that we are headed into a trend change. Okay, when this happens right here, and now we've transitioned from this trend right here where we are ascending, we've identified the range, so we're moving sideways, which we wouldn't want to trade this at all. We have now transitioned into a descending price channel, a descending trend lines, a downwards market. The market is now going down. And when it starts going down and you know market structure, it starts to create lower highs and lower lows. Okay. Lower highs and lower lows. Okay. All right. So all this means in this market is that every time the market created a lower high, you are able to place a sell entry to ride this market all the way down, okay, and profit off of this market. I want you guys to go ahead and practice drawing trend lines. Okay. Let's do another example. Okay, so we're in an uptrend here. All right. Now let's say that we're in a 15-minute time frame right now, but let's say that we go to a higher time frame. I'm actually going to mark where we are. Let's say we go to a higher time frame, we're on a 4-hour time frame, and we draw ourselves a trend line. Now, obviously, in this kind of market, right, we're obviously on a higher time frame, right, the 4 hours. So this is much more data than you would see on a lower time frame. Now, if we drop down to, for example, the 1 hour, right, we can actually draw what is called an intertrend line. So this would be considered an outer trend line, and this will be considered an intertrend line. You can literally draw as many trend lines as you want on a chart to trap price, because this trend line is relevant really up to the wicks up here. This trend line is relevant to 1, 2, 3 touches until it broke out, went in a different direction. All right, so that's pretty much the foundation of trend lines. We want to go over our notes one more time. Okay, so ranging market means that it's moving sideways. Okay, an ascending price channel means that you're going up or you're moving in an uptrend, you're creating higher highs and higher lows. A descending price channel or descending market means that we're creating lower lows and lower highs. We're going down, we're in a downtrend. Okay, how we create price channels is basically if we draw a parallel line at the same angle of the uptrend or downtrend, it would have created a trend channel or a price channel. In a downtrend market, a trend is drawn along the top of the resistance areas. So up here being resistance. In an uptrend, the trend line is drawn at the bottom of support areas, as you can see right here. Okay, helping you identify key areas where you would buy this market up. And there's only 3 types of trends to see in the market, essentially an uptrend, higher highs and higher lows again, the downtrend, lower lows and lower highs, and the sideways market is ranging, which you wouldn't trade that. All right, so let's see how this is basically broken down in the next coming videos and how you can use this to go along with your technical analysis. See you in the next video.